Guys, what is up? Here is a little video on structure. I'm making this video to help you guys understand what it really is and hopefully to show you why or how you may be messing it up. Structure is or can be confusing at times. It's not really something that people focus on enough, in my opinion. It really is honestly the biggest component of trading. Just looking at it from a very technical perspective is the most beneficial way of doing it. And what I mean by that is this. So this is how I look at structure. What I'm about to show you guys, this is how I chart with it, and it's the proper way. I can promise you guys that. So now, before I continue, I'm just going to say this video might be about 20 minutes long. It's going to be pretty in-depth. So in an uptrend, okay, we have higher highs and higher lows, right? So we have higher highs and higher lows. And the significant areas, or the area that you want to be focusing on, is the most recent higher low. So this is the higher low. It's higher than this. So it is a higher low, and price produced this new high. So the higher low, right? Higher high, higher low relative to this, created a new high. Now, where was this high created? This high was created after we broke above this and closed above it. So breaks of structure, typically, when you think of a break of structure, most people only think of it like this. When you break down to reverse trend. That's what most people view a break of structure as. This is your BOS. And now from here, you're taught to look for a pullback, to short off, and then have a new downtrend, right? But a break of structure can also be a continuation. So you have this high and you break above it and close above it. So you've created a higher high. This is a BOS here. So if I go back to my picture to the left, right? So go back. When we break above and close above this level, that is a BOS, a continuation, break of structure to the upside. So now this is from the most recent low to the new high. That is a buying region. That's a bullish region of price where you want to look for continuation. So thus far, it's been a really easy discussion because we're talking about an uptrend, or for me, like uptrends are easier to see than downtrends. I don't know why. It's just kind of how I'm wired, I guess. But this is an easy discussion. What is structure in an uptrend? Or what is, I guess a better way to put it is when you're making higher highs and higher lows, you are in an uptrend. That's the more proper way to think of it. Don't think of it as an uptrend means higher highs and higher lows. For me, I think of it as higher highs and higher lows mean that we are in an uptrend. It's not the uptrend that creates the higher highs and higher lows. It's the higher highs and higher lows that create the uptrend. That's why it's better to think of higher highs and higher lows indicating an uptrend than thinking that an uptrend has to be, or is created by higher highs and higher lows. It's not wrong, but if you're consistent with the cause and effect thinking process, which you all should be, that's the way I think of it, and that's how I attack the markets. You want to think that the higher highs and higher lows are causing the uptrend. So now from the most recent low that produced this high, that is a buying region. We want to look for retracements to buy price back up. And how do you do this? Well, there are a few ways to do it. You look for a fib retracement. You look for a pullback into a smart money zone, like maybe you have an inefficiency right here and price trades into that inefficiency and then goes up. Maybe you have a sell to buy candle here, right? Sell before buying up, so sell and then buy up. Maybe you have a wick. You have a really big wick because wicks act as good areas of sensitivity. It doesn't really matter how you look at it, but the fact is you created a higher high. Now you want to be buying from that higher low to the higher high. And you don't want to, if this is the case. So let's say, I'm going to draw a little bit more. Let's say seeing something like this. So let's say that obviously we have our higher highs and higher lows that are producing the uptrend. Don't think of the uptrend as producing the higher highs and higher lows. The higher highs and higher lows are producing the uptrend. Now, let's say here you had an area of interest as a sell to buy candle. You're looking for price to trade into that, okay? Now, let's say here, the sell to buy will always be, and just so going back to this, so there's a sell to buy in here. Sell to buy candles will almost always, or the biggest sell to buys will almost always be at the valley of a swing and an uptrend. So, and then the downtrend would be at the peak. But in an uptrend, this pullback, so to pull back, you literally don't overthink it. When you're pulling back, you have to sell to buy back up. So let's say you have a really clear sell to buy down here, kind of near the last point of return for this leg. So this is a POI, okay? And I wanted to distinguish this from what I'm about to do up here because typically for me, this is just a nugget. Sell to buys are always best when they are at the bottom in an uptrend, meaning at a valley in an uptrend. So here, let's say there's like a little sell to buy within this region. Let's say there's a little sell to buy right here. What you'll see most of the time is price will go like this, boom, and then just go down, right? And this is a fractal example of what I'm about to show you. So let's say you have this sell to buy down here. You create, sorry, I just jumbled all my words up. That's pathetic. So you create a higher high right here after you break this. So you break above this, create a higher high. So now you pull back, you come into something, and then you create another higher high. So when you create this higher high here, after having a pullback, this region is no longer valid. This is not a thing anymore. Don't try to trade this because if you create, or since you created this higher high, right? In order to pull back to here, what would you be doing? You would be breaking the higher low right here. So higher high, higher low, higher high, higher low, higher high. So if you trade back into here, let's say price is doing this, it's trading down. To get back down to this POI, what did you do? You broke this structure. So now you're bearish, but you're trying to buy it up. That doesn't make sense, right? We know that. That's a common rule. Don't trade against a trend unless you have substantial evidence or a nice downtrend, counter trend movement in this case to support that, right? So now this region is invalid after you pull back, make a higher high. Now let's say within here, you have inefficiency here. You're eyeing this level. This is inefficient price. You want it to trade down. Well, what happens? You pull back and create a higher high. So guess what? This is not valid anymore either. So how does this all tie into structure? Well, it ties into structure because one, you already understand what structure is. So you can make a trading plan to trade based around it, which almost everybody does, or I hope everybody does. So with stuff like this, when you're trading, trying to trade these movements, you're literally going against structure. That's why the title of the video is "You Have Been Trading Structure Incorrectly." Because, and there's another concept I'm going to talk about within it as to why you might be trading structure incorrectly. But the first reason is likely this. So this is in the case of an uptrend. So what people will do is they'll have, this is like one big leg to the upside. You have one leg. These are all the movements within it. Okay. So, and for the sake of illustration, I'm going to add in another leg. This will make it even more clear for you guys. Higher time frame uptrend, right? Higher high, higher low, higher high. Pretend that we were in an uptrend back here. So what people will do is they will see something like this. Within this leg, there's a little uptrend. They'll have this POI here, and then they'll try to blindly buy it up. It doesn't work, I promise. Because what ends up happening most of the time is you break this. You break this structure right here. You break this, and then you end up respecting this new downtrend, right? So after you break this and you pull back, you're in a downtrend. So it's not going to hold. You shouldn't expect this to hold because the structure is telling you that it shouldn't. And for me, I like it from the opposite perspective. So I like seeing it like this. So like you have a higher time frame POI right here. And you trade into it, and you don't even need this, but you break above. So you break above this structure. So now everything, all the little supply regions within here and here are invalid. So because you broke this, there's nothing stopping these highs, right? There's nothing stopping price from attacking them because the structure is now bullish, right? The structure, once you shift here, is bullish. So you shouldn't expect these smart money areas to hold. That's the whole idea with everything that we've been teaching and everything that, you know, like when I reference dumb smart money. So I reference dumb smart money because dumb smart money would still try to take trades off of these areas here, but they're going against the trend. That's why you've been using structure long. You may have it marked up, but you're not using it because you don't understand this concept. And circling back to this picture, I mean, it's the same thing. So I can even expand this picture to make it look like this. So you break structure here, but you have all these POIs, right? Where you think price will, you know, buy up because you have a POI here. But the thing is that you should not expect price to buy up until really you get into higher time frame points of interest. And if I invert this, it's going to look like the picture above. So you can see we trade above, and now all these areas are liquidity, and you should really only expect the deeper retracement to hold the origin of the movement, right? That's what you should anticipate on holding. This is the origin of this push down. So yeah, you have your structure marked up, but you're still taking trades against it like this. When you break this and you have a POI here or here, you're still taking trades here because it's smart money. You're using structure wrong. You need to use structure as a way to understand that once it's been broken, right, all the lows and highs, like here, this high is now invalid. And it's even stronger in the case or the picture that I drew up here. So this, right, when you get a movement down into here, like this, you first of all, you want to see structure being respected or broken. So meaning, like, if you want to buy up from this higher time frame POI, you want to see a break above, right? Because not waiting is foolish. Confirm your entries. It's literally always structure, points of interest, and then a trigger. So here's your structure, higher high, higher low, higher high. Point of interest down here at the origin, the movement that created the higher high. And then your trigger is a break of structure, right? So the whole deal with this, like when you break this structure, so you're trending up, and you break this. Now, this area is liquidity, and this area is liquidity because it's on the relevant time frames, meaning that this is all structure on like the 30-minute, and you break it. So when you break this, it's all liquidity. This is liquidity, liquidity, liquidity. And now here, this just kind of validates it because this is with the trend. So here, when you get a break of structure and a pullback, this is counter trend, obviously. But the idea with trading with the trend is easy. You have a higher time frame POI, right? This big blue box, not blue box, green box. My boxes are usually blue. So you have this POI. Now, after you break this structure, this is liquidity, liquidity. And then, so you pull back, and then you take out the final area of liquidity, you trade into your POI, and then you break structure. So now what does that mean if you break structure? When you have broken structure, that means that all of the previous areas, like this, and this, and this, and this, those are all points of liquidity. And that's why impulsive moves happen so quickly, is because you create you have such a large pool of liquidity on your way down to higher time frame POIs that when you get to them, it's just violently taking them out. That's why this happens. So again, using the idea of structure correctly has a lot to do with this concept, the concept of understanding that higher time frame POIs or smart money POIs like this aren't going to hold if you have broken structure. As soon when you have a leg in a smart money, concept idea or smart money trade idea, whatever, and price is coming into that, right? Or it looks like it is, but then it makes, in the case of an uptrend, a higher low and a higher high. It's not valid because in order to reach it, you have to break structure and you need to follow the structure, not the smart money concepts like this. This is what I'm telling you guys. This is how you're using it wrong. Structure first, focus on it the most. Do not just blindly trade smart money concepts without it. Mark it up and use it actively to confirm areas like down here and to avoid trades like this. Right? And this idea here is the same as like this, because let's say you have areas within here. Imbalance, you make a lower low. So now what's the problem, right? You make a lower low, lower high, lower low. So you've made a lower low. You never pulled back to reach it, right? So you don't pull back to it, you make a lower low. What's the issue with that? The issue is that it's no longer valid because in order to get back up to it, you had to break structure. So now structure is coming into play again. That's what I mean when I tell you guys you're using it wrong. Don't expect it to hold these areas if the structure is going against you. And most people don't use it like that. They'll come up with the excuse that this is one leg and that this is a deeper retracement. No, that's not what it is. Mark up the swing highs and lows that actually are relevant. They don't need to be 50% and use them like that. And now for the big message for structure, this is the big secret. In an uptrend, and obviously for a downtrend, just reverse it. Higher highs and higher lows. Now, anything, so when you have a higher low that produces a higher high, anything that happens in between here does not matter. Literally, that's the secret. People get caught up in this BS, doesn't matter. You want to be looking for buys until you break below this, you're bullish. And until you break above the high, like this is the last low, higher low that produced the higher high until you see a break above. And then the most recent higher low is this one. And then this is your higher high. That's the big secret. Don't get caught up in this. When you're producing higher highs and higher lows, you pull back and you chop around. Doesn't matter. It can do whatever it wants. Until if you break below this, you're bearish, look for a retracement. If you do this, boom, 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 and then you trade above this and close above it, this is not your higher low. This is your higher low. Don't get caught up. Look at it literally from the perspective I told you. Higher high and higher lows in an uptrend, lower highs and lower lows in a downtrend. In an uptrend, look at the most recent higher low that produced the higher high. In a downtrend, look at the lower high that produced the lower low. That's all you got to do, guys. I promise it's not hard. I'm going to go over a quick little trade that I tried to take on GU today. So what do you see? This high made this low. So now, and this is an example of what I'm saying. Just very brief. Here's our structure. We break above. So what do we expect? This is liquidity. This is liquidity, right? Now, more importantly. So what happened here, or what's happening, structures like this. So and this was a higher time frame area. So price trades, if it trades above here and closes, what does this mean? This is liquidity. 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 Because if there's inefficiency here, what do you have to do? You have to break structure to get to it. It's not going to hold, guys. I promise. So what you can see though is we haven't traded above it. We've been selling. So now what did we do? So we had this. We had a higher high. This is like a micro time frame break the structure. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Break below, break back above. So we're bullish. So now what do I expect? I expect price to trade down, or I was looking for price to pull back a little bit into a 45-minute candle before continuing up, because we're bullish on this time frame and you want to keep playing with the bullish structure. Like I said, you want to confirm entries or areas with breaks of structure, because a lot of time what you might see, or sometimes you will see, that price just breaks and continues through. Like here, this is my higher time frame point of interest. This is like the area trading into it, but it hasn't broken structure yet. So I'm not going to try to sell it quite yet. But we are trading in it, so you can look for reactions to the downside. So what do we do? I want to see it pull back into here. So now I go to the 5 minute. This is literally how I did it. So go to the 5 minute. Now, from a technical perspective, this is the last higher low that made the higher high. So until we trade below this, we're bullish, but I could clearly see we were making price action or price movements to the downside, high or lower high compared to this, lower low, lower high, lower low. So what did I do? Went to the 1 minute. It barely missed my TP. I was so mad. Almost traded into my POI. But what do I see? I see high, 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 ran out, lower low, trend line liquidity, run it out, run it out, run it out, mitigate and go. So this is just based off structure. Like I said, technically, here's the last lower high that made the higher high, or higher low, sorry, that made the higher high, because this was a pullback, but it didn't make a higher high. So this isn't it. But this obviously was a big area of liquidity. You can see that it ran it out and then went back up. So higher low, higher high. But within that, I can see that we were chopping around and pushing down. But again, this is the idea. If you're an amateur, don't get caught up. Higher low, higher high. Wait for a price to come back down and buy it back up. I wanted to sell it because I wanted to see a retracement, and I could see that we were forming some structure within this range. Right here, boom, 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 pull back to go short, but it did not end up hitting my TP. Still a good trade though. Trading within the higher time frame, selling block, this big green rectangle. We're definitely having a hard time breaking through it. So you can be looking for sells in there, but to confirm it, a real move to the downside, look for a BOS. However, you can see the structure and we traded into it and mitigated. So I hope you guys enjoyed it. And I will be posting this everywhere. If you have questions, please message us. Thank you guys.